Welcome back. Each year, Saxo Bank releases a series of outrageous predictions for the year ahead. And while we'll get into the full list early next year, tonight in our currency slot, we're discussing the inexorable rise of so-called cryptocurrencies. And joining us on the line now is Saxo Capital Markets macro strategist, Kay van Petersen. Kay, thank you very much for your time.
No problem. Glad to be on. Thank you.
Yeah, good to have you on the show. Kay, with regards to cryptocurrencies, the title of your outrageous prediction is Trump spending binge propels dollar sky high, forcing emerging markets to seek alternatives, creating ideal conditions for Bitcoin to test $2,000. Could you sketch out how that scenario could play out?
Gotcha. So, I mean, just for all your viewers, so to make sure that we're on the same page, the outrageous predictions that we do, you could think of it as a deck of black swan events, right? So they're not necessarily interrelated, but the whole idea here is, what extreme event could happen, and based on that, how does that affect, the investment kind of portfolio or outlook I may have, right? So it's supposed to be kind of a scenario analysis kind of thinking. So the whole idea behind, Bitcoin potentially kind of tripling is the fact that through a combination of, we're already seeing inflation kind of feed through in the U.S., but we get even that much more given reflationary policies with a Trump administration, which in turn basically forces the Fed to be much more hawkish than the market is anticipating, which in turn, results in the Fed hiking more than is expected and then driving the value of the U.S. dollar up, right?
Yeah.
And then that basically results in much more pressure on emerging markets and China in particular. And we actually see another devaluation coming through from China. And what a lot of people may not realize is Bitcoin actually tends to be very much a barometer of stress in China, given kind of capital flight and risk kind of there. So in such a scenario, you could see this, move towards a cryptocurrency based on a much stronger kind of U.S. dollar and the stress from that. And then I think also a fact that a lot of people fail to realize is there's a lot of emerging market powers that for quite a few years now are getting very, very tired of, kind of using the U.S. dollar as a means of payment.
Yeah.
The last few years, I'm sure you and your listeners have obviously heard of, more and more deals being conducted in, not just, Chinese renminbi, but we've also seen the Russians doing deals in kind of the Russian ruble. So, there could be a point in time where, some countries actually look towards a different kind of forms of mean of payment, such as, let's say, Bitcoin or a different kind of cryptocurrency, just as not necessarily an alternative that will fully replace the U.S. dollar, but in just a different way of having less kind of relevance, or should I say, less sole use of the U.S. dollar than is currently the case. Because obviously, if you have to conduct business in the U.S. dollar, which almost everyone has to do in one form or another, especially dealing with commodities, you are in essence conducting business with a U.S. foreign policy, and of course, obviously, U.S. monetary policy.
Yeah.
And a lot of people, find that quite distasteful.
Yeah, but Kay, the thing is, it's not such an outrageous. I mean, it's actually not that an outrageous a prediction. So maybe Bitcoin going to $2,000 is a stretch. But for example, we picked up in an article that came out of the Financial Times a couple of weeks ago, talking about Sweden's Riksbank, the central bank of Sweden. It's the oldest central bank in the world, exploring digital currency. They want to look at an e-krona. And the deputy governor, Cecilia Skingsley, said that it's not an option for us to not do anything. I mean, could we actually start seeing more central banks developing some sort of digital currency?
I think, in my mind, and you raise a very good point, just like how something that's contrarian to one person may actually be the base case for someone else, that's the same thing for these outrageous predictions, right? And what we've also tended to see is something that may seem outrageous on a 12-month horizon, 1, 2, 3 years later, may not sound outrageous at all. So, stuff like, let's say, Brexit, this was actually a prediction, a few years kind of back, and there's quite a few of these that we've seen. Now, from my standpoint, there's just no doubt in my mind that in the future there is going to be a cryptocurrency. I just think the combination of history with most currencies ending up being kind of fiat currencies, history is heavily in that kind of favor, right? I think the only thing that's kind of really been a much better barometer of value has been gold, because that's been around for 5,000 years. But I think kind of coming back to cryptocurrencies, it's not just the fact that people are looking for, let's say, something with a finite supply, i.e. something that can't be just diluted by printing more of it. So, stuff like Bitcoin will have a finite supply. But there's also the whole technology behind it, through blockchain or through this decentralized system. And you're absolutely correct. A lot of governments have been running side tests on cryptocurrencies and the whole new kind of decentralized payment system. And that's very much, I think, a part of the future. Whether it's going to be Bitcoin or Ethereum, Bitcoin by far is the most well-known and it's the biggest kind of out there. It's, over 7 billion market cap, whereas Ethereum is about 1. And, there's hundreds of cryptocurrencies. So, and I think there'll be room for about 2 or 3 of them. It's just like, we seem to have Bitcoin and Ethereum to be, the leading horses in this race so far. Right?
Yeah. I mean, and just lastly, you say that, and I suppose what you've been saying now, you talk about, given the history of booms and busts in fiat money and debt excesses. I mean, fiat money. Yeah. So why shouldn't it be the case that cryptocurrencies take over from the fiat money that we've been used to or become used to in the last couple of 100 years?
No, I mean, absolutely. I think it's just something that a lot of people have to think about. It's like anything that's new, sounds very, very radical, very, very outrageous from that kind of perspective. This is something that's been heavily debated and contested by clients that kind of read it. But, I think, anything that was invented for the first time also had its wave of naysayers from, the first kind of car, the first computer, the internet in its infancy. So from my perspective, this is just something that's going to come to pass, because if there's one thing that, history has definitely demonstrated time and time again, and it's that much more, how should I say, transparent now, given the level of technology and social media and, much the closest thing to a playing field evenly that we've ever had in hundreds of years of humankind. I don't think it's far-fetched to realize that, this system of solely just relying on governments to take care of people's interests, it's not working, right? Look at where we are from the GFC. I think, global debt actually increased by over 40%. That tells you that this is not working, right?
Yeah. It does. Kay, we unfortunately have to leave it there, but thank you very much for talking to us this evening. Kay van Petersen is Saxo Capital Markets macro strategist.